Joining us now for insight on the real estate and housing market, I'm joined by Erin Sykes, founder of Sykes Property. Erin, thank you so much for joining us. It's so funny. We have a big week ahead in terms of a lot of different housing data this week. We had some recently as well, showing just some weakness, whether we're talking about home sales or builder sentiment. Builder sentiment sitting at a 2.5-year low now. How are you seeing these trends playing out in the markets that you cover? I know you work basically on the eastern seaboard, so up and down. What are you noticing about the trends?
Yeah, well, as boots on the ground agents, we've seen these trends for the last 6 months to a year. So they're just now hitting the data, which is why it's always so important to check in with your local agent to make sure what's happening in your particular market. Now, I definitely see the weakness, particularly in Florida. So I cover Florida, New York, and New Jersey. And of those three markets, New Jersey has really been holding the strongest. There's some weakness in New York. Hamptons, definitely a weak summer, down about 30% on our seasonal rentals. But Florida, we're seeing 50% increases in inventory year over year. We're seeing prices pull back 7 to 10%. So that's where the red lights, those red flags, they're really blaring in Florida.
Okay, so two things I want to touch on given that. What is it about New Jersey that's holding up?
You know, New Jersey is affordable. Looking, comparing to New York City or to Long Island, you can live in Monmouth County in particular. That is a hot spot. You're 45 minutes from the city. You can commute by train, by bus, by ferry, by car. You get half an acre to 3/4 of an acre, and you're under $1 million. School systems are amazing. So that is what the customers are looking for right now. They're not looking for condos. And that's why the Florida market's been so challenging, because it's a condo driven market.
So is it also just too expensive in Florida now? Because you notice the patterns of prices shot up in Florida, especially during the pandemic. And now, is it reaching a point where affordability is just a major issue?
Yeah, well, it's not as cheap as people thought. I mean, everybody came down thinking that I don't have personal income tax for the state, and that's going to save me so much money. Well, what they didn't factor in is the way the property taxes work in Florida is that you're assessed at your purchase price at approximately 1.8%. So every time the properties turn over, the tax basis really jumped up. And of course you can homestead, but in terms of your day-to-day living expenses in areas like Miami and Palm Beach County, they're the exact same as here in Manhattan.
Let's talk a little bit about mortgage rates. They've eased some, but it's not enough in terms of when we notice national trends where you see a significant shift in buying. What does it take to move the housing market when it comes to mortgage rates?
Yeah, so I'm not holding my breath on mortgage rates. I think we might see a pullback of half a basis point at most by the end of the year. And that's because the Fed funds rate does not really determine mortgage rates. They're much more so driven by supply and demand. And with this continually frozen marketplace where sellers are expecting too high prices and buyers are sitting on their hands because they're nervous, and frankly, life is expensive right now, I don't expect these mortgage rates to move much.
You describe the housing market in 3 tranches: entry level, keeping up with the Joneses, and the anti-herd. What does that mean, and which group is feeling the economic pressure the most?
Yeah, so typically entry level in the markets that I work, Manhattan, the Hamptons, Palm Beach, Miami, entry level is below $2 million. That stayed strong. Those people expect to have a mortgage. They've already factored it in. We've seen prices adjust accordingly. Now, in the $2 to $10 million, which I call the keeping up with the Jones sector in those particular markets, and granted, those numbers change depending on your portion of the country, but the keeping up with the Joneses are the ones who have been hit with the 1-2 punch. Not only are they beholden to elevated mortgage rates, but they've also seen some challenge on, either their stock portfolio or in terms of the job market. They have seen this lifestyle creep where they have been exposed to ultra low rates and borrowing potential over the last decade. Now they've gotten used to a certain comfortability, and it's just not in their wheelhouse anymore in terms of affordability.
When you think about, to your point about affordability, obviously all of this sounds like the luxury housing market. When there's a person in that industry, if they're not from, a family of wealth, and let's say they, made it on their own, if they're not an entrepreneur and they just have a very well-paid job, if they lose that job, because I have heard of, someone, let's say, for instance, losing their job and they made $750,000 a year, or let's say it's closer to $1 million, it's hard to find a job like that. How does that impact the shifts and patterns that you're seeing in the housing market?
Yeah, and that's a big portion of why people have not been pulling the trigger as buyers. Even though they've seen these prices pull back, they're scared about their jobs. So what if they get into a situation where they can no longer afford what they thought that they could afford? So I think that factors into the fear, trepidation, the frozen nature of the market right now is just because we don't know what's around the corner. We get so much impactful news every week that we're just waiting for the other shoe to drop.
Waiting for the other shoe to drop. That certainly seems to be the case. The overall stock market has been holding up despite, it seems like sometimes on pins and needles when we have all the geopolitical stuff to watch. Erin, we'll have to leave our conversation there for today. Appreciate your time. That's Erin Sykes of Sykes Properties. Our thanks to Erin.